On board Devwn Choksey, the Managing Director at Choksey FinServe, to discuss what the market texture is expected to look like in the near to medium term and talk about sectors as well. Deven, hi, morning. Thanks so much for your time today. First up, this week is very crucial because we have that GST meeting tomorrow and day after. Give us a sense of what the market texture could be like in the near to medium term if all goes as is expected and the slabs are as expected. What could the market reaction to that be?
Yeah, good morning. I think by and large the market has understood the possibilities of bringing down the GST rates in different sectors, and particularly in the consumption space, I think where the expectations are high and where I think the demand scenario probably has remained sluggish in the last 12 months. I think those companies in FMCG sector, they definitely, I think, deserves to be looked at relatively more closely than before. Similarly, in automobile space, I believe that with the rate reduction happening, the upside definitely, I think, is seen much clearer now in some of these stocks. And given the kind of disposable income in the hands of people in the lower interest rates, I think the demand scenario remains as such good. And with the GST coming down, cost coming down, to the consumer, I think it could be adding sweetness to the entire journey of uptick in the auto stocks. So we believe that both discretionary as well as non-discretionary consumption space certainly, I think, would be the first beneficiary as far as the market is concerned. Some of the silent ones, I think, who could possibly benefit most could be the B2B players in the industrial manufacturing space, where probably I think some of the component items may see the lower reductions, and that could possibly give the advantage to them in form of even the input tax credit. At the same time, I think the higher amount of the cost benefits coming into them. So we relatively remain more positive about the prospects going for in selective sectors in manufacturing as well.
All right, so that's about the kind of push that GST rate rationalization can bring in select sectors. But Deven, let's also touch upon some of the beaten down sectors as well. And one such space is power. Really, nobody's talking about that. But Deven, in the latest, what we understand in the month of August, the power generation has seen a jump of 4% on a YOY basis. This is after a weak April to July sort of a trend. Deven, do you believe that it once again maybe needs a relook at this point in time, given the fact during the monsoon, the power demand is expected to go lower, but now with the kind of revision or rather reversal that we are seeing in the demand trends, even the stocks can have some bit of an share over there?
Yes, I think we look at power generation or even power distribution. I think both these space, I think, would remain a relatively stronger space, largely in the current financial year. As we have seen, I think the industrial production activities have started taking place, I think, in a relatively positive manner compared to what we have seen last 18 to 24 months. I think that things are moving much better and much faster. Infrastructure is another area where I think the higher amount of growth is there, and within that the power generation distribution is definitely there. In my viewpoint, I think if one has to look at between the generation and the distribution, my take would be the distribution would be relatively safer bet, because over there the capex program, once it gets over, it generates significantly large amount of cash flows. And that's where some of the transmission and distribution companies could be relatively better placed, as I understand.
Okay, so that's the take. We have Vaishali also back with us. And Vaishali, give us your sense on the entire IT space. We spoke about auto and FMCG, but we're seeing some recent luster creeping in upon the entire IT space as well. Give us a chart check on some of the stocks that you prefer from this basket.
No, I would say actually I would be a buyer. I would really consider buying this sector because we've seen good erosion taking place, and currently from yesterday's candle also what we are saying, it's in the process of a higher bottom formation, and it's about time that the IT sector also participates. So I would of course start looking from Infosys, TCS, and as I mentioned KPIT. Then besides that, it's also HCL Tech, persistent, Coforge. So overall, I think there is scope of good momentum coming in these stocks, and I would definitely have my eyes set on this, and I think they are all technically very well placed.
All right, so that's the take coming in on the IT space for now. But along with that, Deven, off late, some of these metal counters are showing some bit of a rebound. We were just talking to one of the global experts, and even he was of the view that globally the dollar index is expected to see some bit of a cool off. And though there is no direct relation, but as a market behavior, we do see that whenever the dollar index cools off, the metal stocks seems to be shining bright. What is your own sense on the metal pack right now?
So, given the kind of uncertainty with the dollar index, I think we wouldn't like to get into the policy behavior of metal stocks with the dollar index immediately. But I would like to think that the overall demand scenario is emerging stronger. And I believe that I think including the global market with these free trade agreements getting settled down, I think some of the European countries are definitely looking at the sourcing of material for their growth program in the country. And that's where I think some of the metal commodities I think would probably figure well in the entire basket. We believe that one important structural change which is happening for metal commodity, many of these companies are now having the captive power, and they are adding the percentage of captive power on a renewable power basis is something which we believe that likely to change the scenario for them. Solar, for example, 2.5 rupees per unit. Wind could be somewhere around 3.20, 3.25 per unit. And even green hydrogen, which is a good possibility next 4-5 years from now, could even further down the power cost for some of these metal commodity companies. So given the structural changes in the space where the energy prices have ruled the metal prices, I believe that I think the metal as a commodity would have on one side demand improvement and on the other side the profitability improvement, which could be again a specter for next 3 to 5 years. So I believe that I think it is a selective buy as far as some of the ferrous and non-ferrous metals are concerned. Of course, the bullion metals have done something very differently, but these two metals are definitely, we believe, that I think is a buying opportunity given the beaten down state in which they are today.
Deven, if you were to look to add more consumption names and, staples coupled with that to your portfolio, would you now wait it out for the GST slabs to be announced and then perhaps later this week take that call?
So, not completely sure, I think, whether one would like to completely wait for the fall and then buy. In my viewpoint, I think the market itself, I think, is suggesting that it would like to get bottomed out in this particular month. If I'm not putting this particular date, I think, very aggressively, I believe that I think this is expected to happen. In my viewpoint, I think the industry is experiencing the pent-up demand in every situation, and particularly some amount of halting sales due to this GST one is definitely, I think, going to bounce back with a spring effect in subsequent periods. So maybe I think we should be, if you want to perfect it on the timing basis, yes, you are right. I think one could wait till the announcement to happen. But otherwise also I believe that I think most of the stocks are remaining little soft. And given the fact that some amount of sales might get impacted in September quarter, I think that would be a good time or a buy opportunity when the result comes out to add into the portfolios.
Okay, Deven, so that's the take on consumption. We have the pre-open rates flashing on the screen. We'll give those rates some time to settle and revisit in a couple of minutes. But Vaishali, want to get your sense on some of the insurance counters. Now, of course, in the back of this GST meeting, there is an expectation that the GST on premiums for life insurance or health insurance could be waived off. So fundamentally, while it looks like a positive development that the street is expecting, technically, how are some of the stocks placed? And do you prefer life? Do you prefer health, general? What is the subsector of insurance that's looking good?
Well, I would say it should be a basket of both, because health also, like Max Health, if we are talking about, so that is one of the stocks which we constantly see, and I think we are looking at it with a positive perspective. Same way, even with HDFC Life, SBI Life, HDFC Life has been on an upward trajectory since quite some time. So I would say that as long as, even right now, as I'm looking at the charts, there are no signs of exhaustion. This can be calling for a further run-up. So HDFC Life, if I'm talking about 740 acts as a good support, I think this is a good trading range, at least to start with, for a target of 830, 850. And likewise, even SBI Life also showing strength. So I would be focusing on all these and also Max Health.
Okay, the pre-open rates, and it's pretty flat right now. Let's see which way they actually head and settle down in. But let's just shift focus and let's get you an 18-hour exclusive right now. And what we're picking up from our sources is that the insurance industry has written to the finance ministry ahead of the GST Council meeting. Players are saying that input tax credit on insurance is important to pass on complete reduction to customers, and also adding that GST on commission expenses should also be exempted. Now, this is a very big one and has a far reach when it comes to consumer impact. Let me take it across to my colleague Anurag Shah and get in more details on the same.
So, group of ministers has recommended nil GST on life insurance and health insurance premium. But insurance industry, general insurance industry has raised their concern to finance ministry ahead of the GST Council meeting. As per the letter written by insurance industry is seeking ITC for passing of the GST reduction benefit to the policy holder. So presently the GST on health insurance and life insurance premium, the term insurance premium is 18%, and government has proposed nil GST, the complete exemption. So insurers are worried about the ITC, the input tax credit, which they claim against the GST received. So insurance companies pay GST on their reinsurance premium, then commission to agents and aggregator, then their expenses on their various rents and other expenses. So on that GST paid, they get the ITC benefit, and it is around 5 to 6% of overall, and it gets set off against the GST received. But after as government has proposed nil GST, so insurance industry is asking that if nil GST is announced, then whatever expenses they are making, like commission expenses, GST should be made nil on that front also. And they have also written that ITC should be allowed for the insurance companies, so they will be able to pass on the complete benefit.
All right, thank you so much, Anurag, for getting us all those details. So let's watch out for the insurance counters. But along with that, let's also get you some of the tradable ideas. And Vaishali, coming to you, help us understand within the mid-cap basket, which are the stocks that you're tracking this morning?
So if I'm looking at a chart of Tega Industries, so that has shown a good bullish candle yesterday. Volume has been very good. So I would look at this. One of the stocks to my liking is Tega Industries. 1933 is the price right now. Oh, it's already opened with 1950. But I think this is ready for a target of 2100. So I would buy the stock with a stop loss of 1890. And the other stock to my liking is PNB Housing. Quite well corrected. Showing signs of exhaustion as far as the selling is concerned. So I would look at this because this also makes it a very favorable risk reward. 745 should be the stop loss. And if this view goes right, this can give a bounce at least up to 800, 810.
Okay, some interesting ideas there coming in from Vaishali, but let's tell you what else is happening outside the world and of equity markets, that is. Donald Trump has once again attacked India.
New order win is what they've bagged, and the stock could be in focus on the back of this. A chart check on BEL?
Yeah. So I think the long-term trend is very good. We've seen this correction from 420 to around 350, 360 levels. So, well, it's sustaining above the moving average also. So 360 should act as a support. And if it sustains about 380 now, then this is likely to go towards 395, 400 levels again.
Okay, Vaishali, we'll let you go. Thanks, as always, for joining in on that note. BEL currently 1% higher as we speak. speak right now. They've secured those additional orders worth about 644 odd crore rupees. But Deven, what is your own sense on the entire defense pack? Has had its heydays, has fallen also, I think it was pretty much the precursor to the market fall also last year in October. And then once again, because of the order flow being so strong, you are seeing these stocks make fresh highs for themselves. But what about someone who wants to take a new position right now? What would you recommend?
So those who want to take the new position, I think they definitely have to come with the condition that they have to wait for 3 to 5 years to get the right kind of return out of this investment. Largely because of the fact that most of the stock in the near term are fully discounting the growth at which the defense companies are operating today. Most of the valuations are remaining fully priced at current levels in my viewpoint. Even though the long-term visibility remains absolutely intact, I would think that a correction in the price would be the better opportunity. Those who want to buy for near term. Those who want to buy for long term, I think certainly with a wait of around 2 years, I think they will probably start catching the return from the third year onwards.
All right, that's about some of the defense counters. But Deven, we did talk about the power space, but what about Coal India in particular? Because given the fact that the company also came out with its dispatch number, and they look pretty strong at this point in time, wherein Coal India does say that this time around in the month of August, the sales have seen a jump of almost 8% on a YY basis. Anything in particular? Because of late nobody is really talking about the PSUs in particular.
Yeah, I think certainly the growth in the production is definitely encouraging for Coal India for sure. But you are absolutely right. I think people are not giving too much of attention currently to this because of different kind of volatilities involved in the PSUs. Nothing wrong with the companies per se; they are operating on a steady track. Maybe I think the valuation is also not so expensive. But those, I think, growth sectors which are available in the market is basically shifting the money out there. For India per se, I think we don't have any view because we don't cover this stock in active coverage. But we believe that I think given the kind of the thrust on the higher production that the government has put, I believe that the company should be continuing to come out with a better amount of production and so the performance from this.
Just want to check in on what BSE as well is up to. The NSE weekly expiry, remember, has been moved now to Tuesday, and BSE's contracts have been moved to Thursday. Let's see what that stock is up to. Holding up in the green about 0.5% higher right now. There's CG Power, there's Keynes. We're going to be chatting with the management of Keynes as well. Semicon India is likely to be held, or rather is going to be held from today up until the 4th of September for 2 days. That stock holding higher by about almost 0.7%. NMDC, their August sales numbers have come in, an uptick of 8% on a year-on-year basis is what they've seen for their sales numbers at 3.39 million tons. And then, of course, Balrampur Chini, or for that matter, the entire sugar pack. Let's check in on that. We were just chatting with Mr. Chaturvedi from Sri Renuka Sugars as well, and he's quite hopeful about the centre now allowing sugar mills and distilleries to produce ethanol and what kind of a positive impact it would have. A gap up move there for Sri Renuka, 5.5% higher. Balrampur will just come up for you on your screens next. And Hero MotoCorp, which has seen an over 8% uptick on their August sales, clocking in 5.5 lakh units. That's the other stock which is also going to be in focus. But Deven, I don't know how closely you're tracking sugar right now. A big gap up move after the government notification.
Yes, I think and it's a good move, frankly. I think the industry has stabilized a lot after the ethanol. And even the kind of trajectory on which I think the ethanol blending is now working and probably I think expected to provide the trust to the sugar companies. I believe that some of the larger ones are going to be beneficiary. And certainly I think on one side FRP prices are the ones I think which are hurting them by around 4.5 to 5%. But given the kind of good monsoon, I believe that the production is going to be bumper. And that could possibly bring down the price to a certain extent. To a certain extent, it will soften the prices. Not enough, but still it is going to be a good one. So in my viewpoint, I think the growth continues with ethanol and the blending and the better price realization, of course. So positive for the industry as a whole. We don't have coverage on any company, so we refrain from putting a personal recommendation on the stock.
Okay, so that's the take coming in on some of the sugar counters, and of course we're seeing a very good move coming in the pre-open for Sri Renuka, up about 6%, Balrampur Chini 2 up about 5%. But let's talk about some of the other stocks that are doing well in pre-open, and that's Sapphire Foods, that's up 4%, along with an Ola